XRP ETF, especially leveraged ones like the T2X Long Daily XRP ETF, are poised to significantly impact the price and overall market behavior of XRP by unlocking a new wave of institutional and retail investor participation. These financial products, particularly when launched during bearish or uncertain market conditions like we've seen recently, demonstrate strong demand for exposure to XRP without the complications of direct custody or wallet management. On its first day, the ETF saw 55 million trades, ranking it in the top 5% of all ETF launches, a clear indicator of high interest even amidst a broader market decline. By day 2, it hit 3 million trades, and by day 3, it maintained momentum with 88 million, closing at a price of $29.21 on April 11th, up significantly from its earlier price of $23.37. This surge shows that institutional and savvy retail investors are actively seeking ways to gain exposure to XRP through regulated, leveraged vehicles rather than navigating the traditional crypto markets directly. These ETFs are not only giving traders new tools, but also introducing the possibility of a multiplier effect in XRP's market cap and price. For instance, with $5 billion, billion, $10 billion, billion, or $20 billion billion in inflows into these ETFs, the impact on XRP's price could be exponentially larger due to the thin liquidity in crypto markets and the nature of ETF operations, which require the fund to buy underlying assets or maintain derivatives tied to them. While some might assume a simple one input to price increase ratio, the reality is that crypto markets often react with a much larger price movement per dollar invested, sometimes in the realm of 50x, 100x, or even 200x depending on market conditions, volume, and investor sentiment. Therefore, $5 billion billion entering the market might not just raise the market cap by $5 billion billion, it could push it tens or even hundreds of billions higher due to this multiplier effect. This influx of capital, paired with increasing regulatory clarity, especially as Ripple's legal battle with the SEC finds more resolution, paves the way for greater trust and participation from banks, neobanks, and professional asset managers. The fact that Ripple is also gaining access to EWS bond markets further legitimizes its positioning in the broader financial ecosystem, enhancing the credibility of XRP as a bridge currency or store of value in cross-border transactions. As such, these ETFs are not only about passive investing, they represent a turning point in how XRP is perceived and used at the highest levels of finance. This analysis explores the potential impact of institutional investment and multiplier effects on the value of XRP. Beginning with smaller capital inflows, $5 billion billion, $10 billion billion, and $20 billion billion, it's evident that the base value these investments contribute to XRP is relatively modest when considered without leverage or multiplier effects. For example, $5 billion billion at its face value might not significantly affect XRP's price, potentially raising it only a few cents. However, if we apply a multiplier effect, say 50x, this transforms the $5 billion billion investment into a $250 billion billion impact on the ledger, which could push the value of XRP to approximately $643. A 100x multiplier would bring XRP's value closer to $10.80, and a 200x multiplier could raise it to nearly $20. Similarly, at $10 billion billion, we can apply the same logic. A 1x multiplier gives a base of $224. A 50x multiplier pushes the price to around $10.80. 100x brings it near $20, and 200x could theoretically inflate the value immensely, although numbers like $10 million per XRP appear exaggerated or symbolic. At $20 billion billion, these multipliers yield even more striking results. 50x would bring XRP to $20, 100x to approximately $36.98, and a 200x multiplier could raise the price to $71. These figures emphasize the non-linear effect capital inflows can have when compounded by network effects and broader utility. Realistically, though, the exact multiplier is difficult to predict. Different markets and technologies have shown a range of effects, from a modest 40-50x to increases in the thousands, though those are rare and often less reliable. The most common multipliers in transformative financial technologies tend to range between 100x and 200x. This is particularly relevant as XRP transitions from being seen merely as a store of value to becoming a utility asset in a global financial infrastructure used for transferring or tokenizing value, or underpinning stablecoin issuance across institutions. With this shift in perception and use case, and increasing government regulation and support for tokenized finance, the likelihood of institutional capital flowing into XRP rises. For context, at its peak, the Bitcoin ETF saw investments as high as $110,000, $115 billion, and as of April 18, 2025, the U.S. spot Bitcoin ETF still holds around $95 billion. If XRP gains similar institutional traction and attracts comparable levels of investment, the effects could be substantial. Using the same multiplier logic, $95 billion invested in XRP could result in dramatic price increases, potentially up to $167 per XRP NAI. 100x multiplier. In essence, if XRP becomes a foundational layer for global financial infrastructure, capable of facilitating massive value transfers and tokenization processes, the inflow of capital combined with multiplier effects could drastically elevate its market value.